What's up traders, welcome to Failure to Displace. Today I'm going to share with you a game-changing 1-minute scalping strategy that yielded an impressive 32R with conservative risk management during the month of June 2023. This strategy is based on some very basic ICT concepts. It requires no higher time frame analysis or bias. Now, before diving into the step-by-step rules, I just want to give a quick shout out to Mulham Trading for inspiring this strategy. You can check out his video in the description below. Now, let's go over the step-by-step rules that I used when backtesting this strategy. What we're going to be looking for are failures to displace above key liquidity points that we're going to be highlighting on the 1-minute time frame. In simple terms, we're looking for 1-minute liquidity sweeps. We're going to be trading the EURUSD pair during the London session, which is 2 AM to 5 AM New York time. However, I will point out that this strategy should also work great in the New York session and also on any major pair, such as the pound dollar. So go ahead and feel free to test those as well. Now, we will enter at market on the close of a candle back into the range, which means we're not going to be using limit orders and waiting for price to retrace and tag us in. We essentially have two possible entry formations. Our first entry is that a single candle takes liquidity with a wick and closes back inside the range. We would then enter on the close of that candle at market. Our second entry would be where the initial candle takes liquidity and closes outside of the range. The following candle then closes back into the range. At the close of the following candle, we would then enter and target higher liquidity. Our stop loss will be set at a minimum of 1.5 pips or above or below the swing of the candle that took the liquidity. Because we're going to be working with such small stop losses, tight spreads are going to be crucial for a favourable risk reward on this one. If your spreads are 1.5 pips, it's just not going to work. My personal broker offers me spreads on EURUSD, for example, of less than half a pip. Now for trade management, we're going to be taking 50% of the trade off when it reaches 1-to-1, and this makes us risk-free really quickly. We can then let the rest of the trade run until an opposing level of liquidity is taken. And to avoid overtrading or going into tilt, we're only going to allow ourselves to take a maximum of 3 trades per session. But we will also stop trading if we take 2 consecutive wins or losses. This means 2 losses, we're out, 2 wins, we're out. So for me, I found that this overall strategy is very easy to get sucked into overtrading. So we need these kind of rules in place to try and help mitigate that as best as we can. So now that you know the rules, let's jump into the charts and look at some examples and see if you can see promise in this style of trading, and then you can get stuck into your own back testing and forward testing to refine your edge. The examples are going to be split up into 3 sections. So the first one is from the last day of the trading. The second example is a trade I've just literally taken in the New York session using MT4 to illustrate how you can trade this in live time. And then the third example is going to be from the first day of trading, which is a great illustration of how you can easily get into tilt and overtrade this system. So be sure to watch all 3 examples to get a really good idea of how I personally view this and trade this strategy. And if you stick around to the end of the video, I'm going to provide some insights into ways that I think we could possibly improve this further to get even better results. Let's jump into the charts now. The first example I want to show you was done on the last day of the backtest that I conducted. So this is Wednesday, the 28th of June in the London session. And this shows us both entry criteria. So the first one, on the 1-minute chart again, we were marking coming into the London session, which is this pink shaded area. We're marking our highs and lows coming into London, looking for a 1-minute sweep of liquidity. As London opened, we can see that this bullish candle right here swept liquidity. It closed outside of the range, and then the following candle closed back in the range, which would give us our entry signal to then take the short position, targeting liquidity further into the range. Now this is where I've said you need to take your own discretion out of this, because I would have looked at this normally, said there was no way that this is a strong bearish reaction and I'm going to take a short there. That to me looks like I would need extra confirmation, but we would have missed that short entry. So follow the rules. We've closed back into the range on the following candle, take the short position, a 1.5 pip stop loss, and then targeting opposing liquidity. This could have potentially run to a 10-hour trade. So an absolute monster of a trade if you wanted to run that long. Initial liquidity was at 2R, which I'll be honest with you is probably an area that I would have been looking to take out, either the 2R or the 5R, which would have been nice because we have relative equal lows set in the gap time between the Asia session and the London session. So it would have been a very nice 4R trade. From your take profit standpoint, this is something again that you can use your own discretion at. You can decide one way you want to close the trade out of, but two, maybe you want to take partials on the way down, or indeed trail your stop loss as price is dropping. So that would be our first entry. We would have gone risk-free at 1-to-1, which you can see happened literally within 1 minute. So you were risk-free straight away on that trade, and then you're just targeting the opposing liquidity, deciding how you want to manage that. This entry here, which was another winning trade, is our first entry model. So the price took this swing high, closed back in the range with a wick. We would have entered at the close of that candle, and then again targeting opposing liquidity, which could have been the Asia low, or indeed we had a swing low from New York on the previous day to target, giving you again a potential 4.5R on that trade. There is an entry here, so it doesn't win every time. So this is the 3 trades for the day you'll see, and then we're out. 2 wins in this instance and we would be closed out. But there was a loss here if you were going to take every single entry. So we'd put in the swing high, which we took, but we took a swing low here on this bearish candle and then closed bullish back inside the range. 1.5 pip stop loss, we wouldn't have hit 1.5 for a risk-free trade. So there is a loss there in the middle of this. One thing I didn't highlight in the initial thing is I actually didn't take this long trade because I was already in the short trade. I'm not going to start counter trending if I'm already in one trade. However, there was an entry there, so that was a legitimate entry. We can see when we took the liquidity here to take the gap time swing low, we took it on this candle. The next candle didn't close back in the range, so there's definitely no long positions here. This closure back inside the range is not a trigger for us, because we need to have it happen instantly. We want to see liquidity taken and then an immediate buyback into the range to show us strength, which is where we got this short here. Liquidity was taken, immediately closed back inside the range, so we were unable to displace, a failure to displace above the swing high to trigger a short position, taking us down lower. So here I'm going to try and show you a live trade example of this in action so you can understand how I'm working this. I'm using a position size calculator by EarnForex, which allows me a shortcut to place positions instantly. So I have price getting tracked. I just need to move my stop loss accordingly. So we've taken a high just here and closed back in the range. We can now, with our 15 pip stop, we can take an entry at this point because price has just taken this swing high liquidity with a wick and has closed back in the range. We've got a 2 pip stop loss. This is showing as points, so it's showing as 20 here, but it's actually only 2. And we will close half out, so the position size is 11. So I will close at 6, just over half out, when we get to 2 pips in profit. Profit's shown in this bottom corner, so this is how I work it out. So when profit shows me 2.2 or 22 in this corner, I will close 50% to make myself risk-free. Just hide the line so we can see this. So we're 13, 14. So hopefully we can retrace down to 2.2. There we go. So I've closed half of the trade now. So that's given us a risk-free trade at this point. We can then target lower levels of liquidity now. So we could take another take profit here in all fairness, because we are taking a one here. So I'll take 2.5 off as we take this swing low, just to secure more profit. So if that swing low is taken, I will close 2.5. because this could be a liquidity sweep of this before we get a reversal. I'm just going to tighten up this stop loss a little bit as well. So it's very fast paced. You see, we've just swept that liquidity and then we pulled back. So it was a quick action, a very quick take profit. Get yourself risk free as quick as you possibly can. And now we don't need to worry, and we can target much lower levels of liquidity. So potentially a £900 trade if this were to continue now lower down. So we're currently sat risk-free because we've already closed 50%. So there's only 50%, well just over 50% in fact. So there's 50% remaining of the trade on. So if it does stop us out, it doesn't matter, we just chalk that down to a break-even trade. However, we could potentially be involved here with a big reversal to come and take out all of these lows, which would be fantastic if we can catch that as the first example on camera. First example on stream of executing this in live time. So as I say, I do want to secure more profit at this first level here. We've been very, very bullish, and I'm conscious about price retracing, so I am going to take a further 50% of the trade off at this level. As soon as we sweep that low, I will close 50% and then I will leave the rest to run for the session lows, I believe. Just a couple of pips, come on. Another one, there we go. Right, I'm closing 50% there again. We've had 2 take profits now. We can leave the rest to run. Hopefully to come and clean up all of this, and if that does take profit, then that'll be a fantastic £465 and a 10-hour trade from our initial entry. As we've done this now and we've secured some profits, I'm not moving the stop loss, I'm leaving the stop loss above that high, but we have secured a couple of take profits now, so if it does come back to us, we are still going to be in good stead. Nice reaction, price moving away. So again, just to recap, it was this high that we were looking at. Price just took this swing high with a tiny wick and then closed back inside. So that was the trigger to enter on the close of that candle. While we're waiting for this to play out, again, just to review, I'm using position size calculator by Earn4X, which allows me to have a shortcut to place my stop loss, my entry and my take profit at the touch of one button, so I can act really, really fast. And then when we're in the trade, I simply go down to adjust the size, double clicking on size in MT4, and then I can halve my risk as soon as we get to 1-to-1, which is how I manage these trades and execute with precision very, very quickly. And you could see there, as price was moving away, it was really important to start taking profits, doing all that kind of stuff really, really precisely. So again, we're still not looking at moving our stop loss to break even until we take these lows out. This kind of pin back is something that I see time and time again, which is why I've tried not to go break even so quickly. If we can get a nice push through these lows, I will bring the stop down to break even, because we shouldn't come back into this. And then hopefully coming into the New York Stock Exchange Open at 9:30, we'll get a big drive down to take out a lot of this liquidity here. So we're just going to speed price up through this section here because it's just consolidating. This evening there's FOMC meeting minutes, which is why price is probably not reacting as quickly as we would expect. But we can see from this it was a really good idea not to pull our stop loss to break even just yet, because we could have been taken out on 2 different occasions now. So going risk free is the choice to start with. Leave the stop loss in place until we have a clear break away from your entry area. Right, we're going to break even at this point. Finally. If it will let me. Why won't it let me go break even? Right, break even. There is an example of why patience pays there. Price has come. We could take more profits here at these swing lows, or potentially take profits here given that it's FOMC and nothing's happening today. How likely is it that price is going to drop down all this way? Closing half there. I know it's created equal lows. It didn't officially sweep it, but I'm not going to stress. There we go, we're out. We're done. We took that equal lows. I literally ran out of patience there. I can't handle waiting for these lows to get taken. This is the point where price will now accelerate to the original take profit that I wanted. You watch. Break these lows and it'll absolutely fly now. And it is. But honestly, trading is such a psychologically draining day. That was an example of what should have been a scalp that lasted 2 hours. Basically, but the entry was a failure to displace above that high, closed back in the range. We take that and then we've grinded down now. Some nice trade management though. Good example of why we don't move stop losses to break even too quickly, and why it's beneficial to just go risk free using the 1-to-1 50% off method that I use. And we took multiple take profits on the way down as we were taking swing lows, which was good. We have just closed out early now. Price could continue driving down, but honestly that has just tired me out. I just want to get this video edited and put together. So let's move on to the next section. I'm just jumping in because I've just literally finished the edit and logged in to see how that live trade panned out. And if I'd have been patient, we would have smashed those targets that we were initially looking for an epic trade, which I could have caught live on stream. So that just shows, guys, patience pays. When we started taking these lows, I got shaken out. I was fed up and worn out. But if I'd have had the patience, I walked away from the screen where we took the equal lows, relative equal lows that I was looking at initially, and we've even come down to threaten the London high. So that would have been an epic trade. Just quickly looking at that on Trading View, we can see we'd have taken 16R if we'd have taken the swing lows there, and a potential taking down to these lows here, a potential 22R trade caught live. So this system works. We got the exact pip at the top, the high of the session, and we could have held that right down to potentially the low of the day. I mean, this thing could keep running if you'd have had the patience. I just wanted to drop that in the video because there's 2 lessons there, really. The first lesson is that the system does work. You can grab some absolute monsters on this setup. And the second is that you need to be patient when you're trading and not get shaken out of your entries when you know where the liquidity grabs are. Okay, let's jump on to the next example. In this next example, I'm going to go to the first day of the test. So this is Thursday, the 1st of June. just prior to the London session, we're marking out our swing highs and swing lows. So we've got a swing low directly below us. Now let's just put in these swing highs here. Looks like a nice liquidity area as well. We have got some lower buy side that was put in the New York PM session from the previous day. Obviously we've taken Asia low now, so our swing lows are here, and then these from the New York session as well. And we have our swing high just in the middle of here as well. Quite a few levels just to keep an eye on here. Let's zoom up a little bit so we can see what we're playing with. And I'm going to play you through this live time because this is a good example of how easy it would be to start over trading and why you need to have the 3 trades per session rule in place, in my opinion. Because this, on the first go, is a pretty crazy session to trade through. So we open, we take the low. Preceding candle closes back inside the range. So this is our entry model number 2. First candle sweeps liquidity, second candle comes back within the range. So there is a long position. Quite a large stop loss on this one. It's a 3.3 pip stop loss. Our first area of liquidity is here, which doesn't even give us our 1-to-1. So our 1-to-1 is going to be here. So we can ignore this level of liquidity because in order to get risk free we need to at least tag here. Our next level of liquidity for possibly closing out would be here, giving us just a 1.2 R. So we're in the trade because we entered at market at the close of this candle. Price is proceeding. We've hit the 1-to-1. We have taken this initial liquidity. So here is where you could close out because you could see that we've taken this liquidity and we've closed back inside the range. So this is a second trade. $1.5 pip stop loss, which is just up there. So we'll have 1.5 to get us to risk free. So we are now risk free. Our opposing level of liquidity is here. So we can trade this down to these swing lows here now. We'll remove this swing low because that's our next swing low level. And then obviously we have the new swing low at the bottom. So now that we're in a short trade, we are looking for a failure to displace between this low and this low. Price comes down. Oof, it's just closed on the low there. So 2.8 R potential closure out of the trade. We've not officially closed back in the range, but we are right on the range. Next candle closes back in the range. So there is our third entry trigger. We have swept liquidity and we have pulled back in the range. So we can now take this as a long trade. Again with our 1.5 minimum stop loss, which takes us just below the candle low. 1.5 for a risk-free trade. 1-to-1 is there. We'll go straight through that. Our next level of liquidity is obviously the new swing high just up here. So we can move this one to here, which is our new session high, which would be what we were looking for. So there's our 3 wins. Back-to-back trades. So you can see how this is really fast and furious. Now though, we have got a liquidity sweep and a closure back in the range. So if we didn't have the 2 win rule or 3 maximum trades, we could just try and continue going with this. Closure back in the range. So we are going for a 1.5 pip stop loss. Risk free at 1.5. This is our new swing high because we have just taken that. Our target would be this swing low down here. So let's just see if we can get risk free here. So we've just tapped risk free, so we are risk free at this point. Powering through, so our target would be this swing low. Actually, we've got a swing low just inside here, giving us a 3.2 R. Come through, so that would be a break-even trade. We've swept the high, closed back into the range. So another potential trade is on the cards here. Stop would either be above the high or at 1.5. So 1.5, I would set this at something like 1.7, a couple of points just above to allow for any spread. 1-to-1 to go risk free. So we're entering at the close of this candle. So we are risk free again. We're going to be targeting this swing low as our first potential closeout. So there we've got another 2.3R. So now we're looking for a failure to displace from any of these swing lows to get into a long position to try and trade this back up again. Taking the low, big failure to displace there. So this would be another trigger to go long. Close of that candle, so the bottom of that candle, you're going to have your stop loss below the wick, so it's larger than it was previously, a 2.3, 2.4 pip stop loss. 1 to 1. So we are risk free, more or less instantly, just within a minute or so, and then you're targeting the next level of liquidity now, which would be up here. We have swept one swing high actually, but this is just above 1 to 1. So you could have potentially closed out there if you wanted for a 1.3R. Hold this, or take some more, take profit off there. Hold this to try and take out the highs. With that being such a strong reaction, you'd maybe want to hold a little bit longer. So we've created equal highs here, so whether you would have got tagged out and closed out, I'm not so sure. You get taken out eventually for a 2.5R trade there. So you can see these are just stacking up with wins here, which is why it's very easy to get extremely sidetracked with this. So we have now taken these equal highs, but we've closed back inside the range. Potential short trade on the cards. 1.5 pip stop loss, which takes us just above, just under this high here. So would you want to take it a little bit higher just to cover that? I'll stick with the rule, 1.5, 1 to 1. So that gets traded through straight away. So you've got one loss there, stack of wins, 1, 2, 3, 4, 5, 6 wins, 1 loss. But we've closed back in the range. So we've taken this high and closed back in the range. So you could theoretically take another trade. 1.6 we'll go for, just give us a couple of points above that high. We're on the close of this candle. One to 1. Another loss. So you're stacking up the 2 losses. So you can see how this just ends up getting a bit obsessive. We've not closed back into the range on this candle. We have closed back into that range there. This wouldn't count as an entry. So we've had 2 losses back to back there. The first one took the liquidity and closed back in the range. So that was entry model number 1. The second candle didn't close in the range. So this closure back in the range isn't an entry for us. So we are now out of this until another level of liquidity gets taken. I've got a swing low here. Take and close back inside the range, so you've got a potential to go long here. 1.5 pip stop loss to a 1.5. So we enter on the close of that candle because it's failed to displace below this swing low. We've got stopped out, so now the losses are stacking up as well. So you would be really happy if you'd have closed out at the start of the session instead of trying to trade this now and getting frustrated giving back all of your profits. So this is why I have these rules in place. Take the 2 wins, get out. Take the 2 losses, get out. Let's not start building up bad habits and losing over and over again, giving back all of our potential wins. There's 3 losses. We'll continue with this just as a test. Relative equal highs here. We have got some swing highs there now. And obviously this swing high has been taken, so we've got a swing high at the high, and then we have a swing low here. So we can just carry on with our swings, just looking for failures to displace. Swing low there, we've closed below that swing low. I wouldn't take that. That's not really a closure back inside. That doesn't look like a trade. This is a trade. So that has swept those highs and closed back in the range. $1.5 to 1.5. Okay, so you're risk free, and that one very, very quickly. First take profit, potentially this swing low here for a 2.4R, which gets smashed. 3.2R if you were taking more take profits. 5.2. We've got a swing low down here. It's not taking it. There's the taking it there. For a 6.8R. That closure back in the range, and that's closed back inside the range from that swing low there. So we swept the liquidities, closed back in the range. We had a lovely 6R trade there. We can take this. Now I'm just going to highlight again, this is not the way I trade this. I would have been done and dusted, but I'm just showing you how you can get over trading and totally get into tilt with this system. We have taken liquidity, we've closed back in the range. Our 1-to-1 is, sorry, can't count, just here. So we've taken another loss. We've closed back inside the range again. One candle has taken this session low, so the liquidity at the session low, so we've got a potential long position on this one. 1.5 pip stop loss, 1.5 take profit, so we are in the trade. We are risk free. Our next swing high would be these relative equal highs here. Not taken them, and that's a break-even trade at that point, but we have taken this swing low. I think we'll stop there. You get the idea. The trades can stack up crazy, and you will land some really big runners. You could end up with a lot of consecutive losses as well. I think in order to preserve your mental capital, 3 trades is enough. Have a 3-trade rule, 2 wins out, 2 losses out, and have done. Because trying to trade like that through the whole session is going to be absolutely mentally draining. So I would rather get in, grab the 3 wins, grab the 2 wins even, and close out and be happy. Don't worry that I'm missing out potential 6 hours and 7 hours. I've taken my profits and I'm off the screen. Go out and enjoy my life and reset to come back the next day, rather than trying to trade like this in and out every single swing. So this is a rough example of how you can overtrade this system. And there we have it. Some really good examples there of how we're trading the system. Just having a quick look at the results that I was able to achieve during June. Based on risking 1%, then we would have obviously returned 32.97% profit. That would be double if you were risking 2%. You should see that while trading this, there are consecutive days where we are taking 2 losses in a row. So for example, day 3, we lost 2, so we were out of the day. Day 4, we lost 2 on a row, so we were out of the day. So there was 4 trades where we lost in a row. Day 6, we had 2 losses, so we were out. Day 11 and day 12 as well. So the multiple days of losses can stack up as well. However, overall, it does appear to be very, very profitable. So I would definitely recommend backtesting this for yourself, seeing what kind of results you can produce, and if there's any refinements that you can make to make this even more profitable. So a couple of the points that I've considered to help me improve this system, first of all, is multiple take profits, which I've mentioned in some of the analysis. But also, instead of looking at 1-minute swing highs and swing lows, perhaps highlighting 5-minute swing highs and swing lows, then looking on the 1-minute chart to take those with the failure to displace above. My theory behind this is using slightly higher time frames swing highs and swing lows should generate more liquidity, which means if we fail to displace across those, the retracement, the reaction at those levels should be a little bit more extreme, which should give us a slightly higher win rate. So that's something I'm thinking of backtesting in the future, just to see how that plays out. But I hope you found this useful. It's a fantastic system. Again, another shout out to Mulham Trading for highlighting this kind of strategy to me. It's something that I'm going to be testing thoroughly moving forward and implementing into my trading, because it really does suit the fast-paced in and out of the market style that I like. If you enjoyed the video, please give it a like. If you've got any questions, please leave them in the comments below. And if you want to see more content like this, then please do feel free to subscribe to the channel. It'd be great to have your support.